Another day where all three indices sell off. Dow dropping 0.75%, S&P dropping 0.7%, NASDAQ dropping another 0.92%. The losses led today? Surprisingly, the reopening stocks. The airlines down 4.1% in the Jets ETF. Cruise lines also taking a big hit. But what has been leading this big sell-off and why? That's the question. Well, there's a lot of great answers, but there's no right answer. That's the problem. Some people are saying the interest rates, but the interest rates have been dropping. A lot of people have been saying the reopening trade. Yeah, but the reopenings are getting slaughtered today. Today is just another class example when sometimes the market just sells off. And on those days, it's a perfect opportunity to buy, in my opinion. I'm not a financial advisor. But it's a perfect opportunity to buy, and that's exactly what I did today. If we go ahead and actually look at some of the things that I bought today, I bought quite a lot. I added a lot more Apple. I added a lot more AMD. I added a lot more Amazon, about $2,000 more. More BABA. More Disney. And these are some of my new positions I added. HLYN. HLYN's one of the companies that have just gotten absolutely slaughtered. Slaughtered recently. We're going to go ahead and look at their chart in a second. But I went ahead and sold this pretty safe put. 7.5 put. Got paid pretty decent. $212 to say that HLYN's going to be above $7.50 by next year. It's sitting at $8.20 right now. So odds are I'll probably make money on that. Another play we did, JMIA. We've traded JMIA before. We've made good money on it in the past. It got hammered. Was in the high 30s a couple weeks ago. Now is, upper 20s. So went ahead and sold a $25 strike price put. Got paid $575 to do so. So again, out of the money, safer position, getting paid to do it. And then XPEV. We've been adding to our XPEV position. We have 2 puts on XPEV already, another EV company that's just been taken down recently. So I want to show you guys a couple charts quickly because a lot of these have just been, just slaughtered. First off is HLYN. Now, HLYN's really had a rough patch. The company's at a $1.4 billion valuation. It hit its 52-week low today of $8.08. But can you believe that this stock was trading at $58 at one point? It is now down almost 90% from its highs. So I am taking a small position in this. It's not much. It's not even 1% of my portfolio, but I think it's a good investment. I think it's a good risk to do. If this works out, okay, I make a couple $100. If it doesn't, I lose a couple $100. It's not a big deal. Another one is XPEV, the one I guys have been telling you guys about for a while. This stock stayed pretty strong today. It actually finished even for the day. Down a little bit after hours. Everything really took a tumble after hours. A couple articles came out and some bad things as well. Netflix just getting hammered after hours, down 10.5%. Misguidance on their subscription numbers. So again, just gets clobbered. Street's expecting a lot right now, and a lot of companies that have earnings coming up because of that also sold off. Another one of those is Amazon. Amazon gets sold off a little bit after hours as well. Says it's recovered a little bit since then, but it could always be a glitch. Apple, the same thing. Dropped another 0.4% after hours when Netflix's earnings came out. High expectations on Wall Street right now, and that's expected. So the question is, when you see down days like this and all 3 indices and some stocks in particular taking more beating than others, do you buy? I think you do. If you go long term. If you go short term, you're taking a gamble. Okay, well, it's not exactly investing when you're going in a short term, a 1 week, a 2 week period, because no one can control that. No one has the hindsight or whatever futuristic vision to see what's going to happen in the next couple of days. We can get a gauge of what's going to happen in the economy over time, 5-6 months down the road, but it's really hard to tell what's going to happen in the short term because there's a lot of variables that we cannot control. We've seen this time and time again with the crash. Just literally about a month ago. When Apple was sitting up here around 145 and then, crashed 20% in about a 1 month period. So it's certain things like that you just can't prepare for. But if you go long term, and if you look at our positions, all of our positions are very long term. January 22s, all across the board, basically. We have a couple ones here. But majority of these are, the earliest position being September for BABA. We have one Amazon that's, May, but we wrote that a long time ago, and that's obviously still very safe now because in fact it's 31.60, and Amazon's trading at 33.30 or 33.10 after hours. So we're trying to be safe, but we're also making pretty good money on this. I mean, if you look at the percent return we're getting on some of these options, it's like 30% at least. that adds up well. That is a lot of money for our portfolio, to add up over time. We hedge ourselves a little bit with selling some naked calls. We did sell a couple of these too early today. We could have got obviously a lot more, but we're just trying to do what's best and trying to make solid profits. But a lot of these companies they're great bargains right now, and I definitely think you should take advantage of staking a long term position in it. You call holders and put holders have been getting slaughtered recently. There's no doubt about that. Call holders, put holders, they've been getting slaughtered because of this volatility. You're holding a 1 week call or a 1 or 2 week call, and you have 2 bad days in a row. That call is done. A lot of people have been buying the Apple 140 calls expiring this week. They have 2 bad days. Even a flat day like this. The week hasn't done much at all. It's down 1.3%. Those calls are done though. Those calls are massacred. So that's the problem about playing the short term game. I told you guys I used to play short term all the time, and it worked out at first, but then you have a bad week, 2 weeks, your account can get blown up like that. So I recommend staking more long term positions in all the companies that you're in. Potentially Netflix could be a great play as well tomorrow. This thing opens at even near like 480. I think it's a good long term hold. I really do. I personally like Disney a little bit more because Disney has the aspect of not only Disney Plus, but it has a lot of other aspects too, like the parks, the cruises, movies, all that good stuff. It really bodes well for Disney. So I like it. I like streaming services. I like stuff that you're getting free cash flow, and that's exactly what Disney and Netflix is on their streaming services. But a lot of these downturns are good opportunities long term. And we've seen that time and time again. When's a time when Apple or Amazon has dipped and it's not been a good time to buy? It's never. I was telling you guys a while ago, when it was in the 119s, 116s at one point, I was buying like crazy. Every dollar I had, I was putting in an Apple because I know it's good. And one thing that stands out from it, it's numbers. The numbers that back it. A lot of these companies, they have no numbers, so they can't fall back on it. You see an earnings quarter like this, you buy something, you buy that. That's good growth. That's good stuff. They had an announcement thing today where they announced like the Apple Tag, another subscription service, new iPads, some iMacs. They're putting their custom chips into their new colorful iMacs as well. Different stuff like that. They're innovating. They're staying good, but overall it's solid. It's a solid company. A lot of these tech stocks are. You want some of the best tech stocks. You look at the QQQ. This thing is on fire. This thing is a giant. Look at that. Look at that chart. Consistent growth over time. That's what you want. Put your money in long-term quality. You guys know me. I like to put credit spreads long-term. I think they're amazing. This is a great opportunity. Great opportunity to get some good shares at a cheap price if you want to buy shares. Sell some long-term puts if you have the capital behind it. The capital, sell some long-term put credit spreads. Go out of the money if you want. Be safer. Go in the money. Either way, there's ways to make money. And so while, yeah, it stinks that I did lose some money today in the market overall, at the same time, I set myself up perfectly for the future. And that's exactly what we want. We added a bunch to our account, and we're doing really good. We're still doing really good for the month, up a lot. Every time we buy in the dip, it seems to work out pretty well, and that's usually the trend long term. So that's what we're doing. That's what we're staying with. But yeah, you guys have a wonderful day. Let me know if you have any questions. You want to chat? Come in the Discord, link in the description below. But have a wonderful day, and let me know your thoughts on this. Wonderful day, guys. Bye.